Hey, my name's James Nicholson. Welcome to my YouTube channel. Interest rates have dropped, interestingly enough. Two big lenders have dropped their rates already this week, and the big six are expected to catch up and match those rates in what seems to be an interest rate price war at the moment. Now, we're going to deep dive into that and more on this video. But before we do that, if you haven't done already, do smash the like button on this video. I think we could hit 150,000 views on the channel. We're actually quite a bit ahead on August first week. So things are looking good. So smash that like button. That really helps us with the YouTube algorithm. Together, you're helping grow this channel by doing that. And if you haven't done already, I want to hit 10,000 subscribers by Christmas. We're at 7.5 nearly now. So smash that subscribe button and hit the bell notification so you get all the new content. So just a few quick things. We've changed a little bit on the channel now. I'm going to see how long I can do this because maybe I'll get burnt out, but I'm going to do my best to do this. So what seems to be popular is the news content. So we're going to have news every day like we have been for a while. And I've added as well, if you look at 11 o'clock in the mornings, I've added some more education content because I think it's great knowing what's going on in the market, but the point of this channel is to help you guys become property investors, or if you're already an investor, to improve your cash flow and make more money with your property investing business. So what we'll do is we'll have education in the morning, we'll have news in the evening once we've got that through. So hopefully that helps you guys moving forward. So what's going on with interest rates? Well, we've got some news this week that it's likely inflation will go up again in September. Michael Gove is calling it a blip, and that's because energy prices have risen. And so we could go back up above 7% interest rates. Now, that means very likely that the Bank of England are going to increase the base rate. And that's going to likely happen in the next few weeks as well. So banks are actually reducing their costs, and it seems to be mostly on 5-year deals. Now, what that shows us is that banks and forecasts are looking like interest rates, they're expecting them to come down, but the fact that they're not looking to change the 2-year deals so much indicates that they think the higher rates will stick around for longer. And so banks have to be competitive because really how we shop these days is on places like comparison sites. When I go to, I use a broker rather than a comparison site, and I would recommend that you do too, but it's the same, right? So I go to my broker, I actually have no care in the world who the lender is ever. All I care about is who's going to give me the best rate and the best terms, right? That's what I really focus on. And so they'll bring me a couple of deals, and 9 times out of 10, it will be the cheaper rate that I go for and the cheaper overall cost, because some have a cheaper rate with higher fees, right? And so that's important to understand for banks, right? So let's just say you're NatWest. If you're doing a 6% deal, yes, you will get some clients, right? Of course you will get some clients. You'll probably get clients that already bank with you. Easy, low-hanging fruit. People that don't shop around. Some people just log into their online banking and it offers them a mortgage product. And they think, you know what, I'm already with NatWest. It's less hassle. I'm going to go with those guys. But that's not most people. Most people are looking with a broker or on a comparison site. And so if NatWest say they're 6%, but HSBC say they're 5%, HSBC is going to get all the business, or the majority of that business. And so these guys have to compete with each other, which is good for us. And that's what started this week. Again, we had this a few weeks ago, right? So even though we've had interest rate rises, we've had interest rates, the actual rates that we get going down. And so banks use something called the swap rate. They get their lending from other banks, but that's predicted on the swap rate rather than the base rate. Doesn't need to be too complex. Just understand that the forecasters that are looking at it are saying probably within 5 years interest rates are going down, but there's less likelihood of that happening in 2 years. And so they're getting better rates themselves when they borrow on a 5-year term than on a 2-year term. That gives them some more margin. That allows them to be more competitive in the market. That's all we care about, right? All we care about is the interest rate coming down? Yes, it is. And it's more likely that other banks will have to drop their rate in order to get business. Otherwise, they're going to lose market share, which is a win-win for us. The more they fight, the better for us. So what is going on? Well, HSBC's 5-year rate has had a decent drop here. So it's gone from 5.25 to 5.16%. Now, some of you are going to look at that and say, that's nothing. Well, if you're a buy-to-let investor, that's a big chunk of money, right? That is a big chunk of money because you're paying interest only. On a repayment mortgage, it might not make a huge difference, but it does make some difference. And the fact that we're getting a little bit of a price war here, while rates are still predicted to go up, is a good sign, because when they start leveling off and going down, maybe they'll be fighting even more to get our business. So HSBC are doing this. NatWest are marginally reducing their rates as well, which is good. And the average rate, with all lenders included, has dropped quite a bit since July as well. So in July, the average was 6.86, and now that has dropped to 6.37%, right? Base rate, Bank of England base rate has gone up 0.5%, but we've had the money that we can borrow has gone down by 0.5%. This is good news. And so this will take some pressure off a lot of people. HSBC as well has just launched a 40-year mortgage, which is interesting. I'll make a video on what my thoughts are on that in the next few days. I'll probably make it this afternoon, hence why I'll be wearing the same top, just in case some of you do wonder. I know you do. Do I only have one top? No, I make a batch of videos just in case. So yeah, look, this is positive news. I think any reduction in interest rates is going to help people. Remember, this will improve affordability, right? So market house prices, they're going to go down for sure, but it means that they might go down that little bit less. People's wages are going up higher than inflation, so that's bringing up their affordability that side as well. Now, it's not making it as easy as when rates were at 1%, but it is helping, and that's good news. And so you can't expect rates to go from 6% back down to 2 or 1 overnight. That's not going to happen, and it probably won't happen. I think interest rates are going to go from 6% that we're looking at now, and I think you'll have a realistic rate of around 3.5% to 4% with the Bank of England, and that's fine. So as an investor, I'm not really massively fussed about what the rate is. What I'm looking for is more predictability in the market. It's tough when there's uncertainty. So if you're buying a deal today and you're panicking that the market is going to go down 30%, if you can't negotiate a good chunk off that deal at the beginning, then that will make you hesitant to maybe do that deal. Or if you feel the interest rates are going to go through the roof, or if you think interest rates are going to crash, that will stop people buying as well, just as much as interest rates going up. So if interest rates are sitting at 6% and you're highly likely you believe the interest rates are going to be at 4% next year, then you'll wait. You'll wait until to do that deal. And that's not good for estate agents, solicitors, anyone that works in that transactional business of property deals. So that's what's going on. HSBC, NatWest have dropped their rates so far. Others are highly likely to do this as well. This is good, positive news. Let's see what you guys think. Tell me in the comments. Do smash the like button, guys. I know some of you are going to tell me, well, this is a tiny little bit off a payment. It's better than nothing, guys, for sure. Do subscribe to the channel and watch some of the education videos in the morning. Learn some stuff about property investing. I think it's really, really good thing to be doing. We've got a flash sale on the fundamentals of property investing. I'm going to link to that below. Go and grab a copy of that today. It's just £19 right now. And check out another video right here.